Have you ever wondered how the current state of the banking system affects your bank account? Let's take a look at what's happening right now. Recent data from the Office of the Comptroller of the Currency, or the OCC, reveals a surprising trend. Banks are closing down at a rapid pace, particularly in California. This year alone, we've seen 282 branches shut their doors. This marks the second highest number of closures in this century, surpassed only by the year 2020. The situation isn't just limited to California. Across the United States, a staggering 3,000 bank branches have closed down, while only 1,000 new locations have opened. This shift is not just a change of scenery, it's a sign of a significant transformation in the banking landscape. It's clear that the banking landscape is changing, but what does this mean for your finances? Bank closures are not just numbers, they have real-world impacts. Imagine, for instance, a community that relies on a local branch for its financial needs. Now picture that branch closing down. Who gets affected? Primarily, communities of color and lower-income communities. These are the groups who often lack access to digital banking resources and rely heavily on physical banking locations. Take, for example, the recent closure of a PNC branch in Strasburg, Pennsylvania. This isn't just a building shutting its doors, it's a vital financial lifeline being cut off. And while banks like PNC are attempting to balance their brick-and-mortar footprint with digital expansion, the reality remains that not everyone can or wants to transition to online banking. Access to lending, a critical aspect of financial health, may also be affected. When a bank closes, it becomes harder for local small businesses to secure loans and for residents to manage their finances. This ripple effect doesn't just stop at banking, it extends to local economies and can even influence the broader economic landscape. As banks close their doors, it's crucial to understand how this may impact your financial stability. In the face of these closures, online banking has surged in popularity. As traditional brick-and-mortar branches shutter their doors, the digital banking landscape is thriving. The rise of online banking has undeniably contributed to this pace of closures. Banks are now finding themselves in a balancing act, trying to maintain their physical presence while also catering to the growing demand for digital services. Take PNC, for instance. Despite closing branches, they are actively trying to strike a balance between their physical footprint and their digital expansion, but they're not alone. Across the board, banks are realizing the need to cater to a digitally savvy customer base. However, this shift isn't without its challenges. With the convenience of online banking comes the need for robust security measures and user-friendly interfaces. Banks are investing heavily in these areas, ensuring their customers can bank online with confidence and ease. But what does this mean for you? Well, the rise of online banking presents an opportunity to manage your finances with greater convenience and efficiency. As banking moves increasingly online, it's important to adapt in order to safeguard your finances. So, how can you prepare for potential financial crises in light of these changes? The answer lies in 3 key steps: budgeting, diversifying, and saving. Firstly, budgeting. With bank closures and the rise of inflation, budgeting becomes more important than ever. It's about understanding your income and expenses and making informed decisions about where to allocate your resources. Prioritize your needs over wants, and always account for unexpected costs. Secondly, diversification. Don't put all your eggs in one basket, especially in times of financial uncertainty. Diversify your financial services. Use a combination of traditional banking, online platforms, and perhaps even consider investing in assets like gold, silver, real estate, and tangible assets. This can provide you with multiple streams of income and reduce the risk of being heavily impacted by a single financial event. Lastly, saving. Maintaining a healthy savings account is like having an insurance policy against financial crises. It gives you a buffer to fall back on during tough times. Remember, it's not about how much you earn, but how much you save and keep. By staying informed and prepared, you can navigate the changing banking landscape. In today's banking climate, change is the only constant. We've navigated through the current state of the banking system, witnessing a significant trend of bank closures, particularly in areas like California. This shift has had a profound impact on communities, especially those of color and lower-income groups, as their access to lending may be compromised. Simultaneously, we've seen the rise of online banking, a digital revolution that's redefining our traditional banking experiences. While it's catalyzing the pace of bank branch closures, it's also opening new avenues for financial transactions, making banking more accessible for many. Moreover, we've explored strategies for financial preparedness, underlining the importance of budgeting and planning for potential financial crises. With the unpredictable banking climate and economic uncertainties, these strategies could be your safeguard against potential financial downturns. Remember, knowledge is power in the face of change. Stay financially savvy and your bank account will thank you.